obviously it's incredibly difficult to invest in Indian markets, but just an investor perhaps watching in India. Could you buy at these levels? Because it does look like a little bit of an opportunity.
I wouldn't be buying at these levels. Mostly, it's got mostly to do with valuations and not really about the concerns. It's a capital-intensive, low-margin type of business that Adani Group is generally in. Adani Enterprises is a collection of various types of businesses. So right now, it trades anywhere between 25 and 40 times EBITDA, even after these results. So we look for a different type of company which has earnings that we can sort of predict and see 5 years down the line, a much higher return on equity and capital light. Off the top of my head, I would think of companies like Titan and Infosys as companies that tick those boxes and not the infrastructure Adani Group. So the answer is no.
Yeah, and we've often talked about transparency of earnings, to be able to see the money, to be able to see the cash out. But I've got to ask you as well, because we can talk about Adani and keep talking about Adani and just the high leverage and it as an infrastructure play, but wouldn't a lot of other businesses around the world be facing similar challenges? It's just that they haven't gone on the run that Adani has over the course of, say, the last year or so, but these are businesses that have got a lot of these assets on their books on a private basis and mark to market. We could see more than just an Adani.
Are we talking about India or infrastructure businesses in general?
I'm talking infrastructure. I'm talking infrastructure business in general, because Adani's getting all the attention, but doesn't this make you think that there could be others around the world that we just don't know about right now?
I think the underlying assets, the infrastructure assets in the Adani Group, are pretty good. The ports, the electric transmission business, and so on. The problem that you're looking at Adani is specific, I think, mostly to Adani, the conglomerate. It's not really even generalized to other conglomerates in India or even other infrastructure businesses. Now, if the question is about are other globally listed infrastructure companies going to have some of the leverage-related issues that Adani currently is facing, I would say that depends on how mature the infrastructure asset you're looking at is. Is it in the investment phase, or is it in the cash harvesting phase and mature? How much of that is like sort of project finance leveraged, and how much of that is short-term leverage? Now, in the case of Adani, what has happened is there are two layers of leverage. The family pledged loans, that's the backbone of their ownership of the overall conglomerate. And then the leverage that was taken on to either finance mature projects or bridge loans and so on that went into facilitating the asset growth that they've seen over the last 3-4 years, like the bridge loan for the cement acquisition and so on. So I think the issues are fairly unique to Adani, but not really so much about other infrastructure companies. But of course, accounting transparency and earnings quality is going to be the case that everybody will look for, even in the case of other infrastructure companies.